If you're Googling 2025 government shutdown explained, CDFI Fund layoffs, or what's happening in the world of small business financing, stick right here. You're in the right place. Today, I'm going to unpack how the 2025 government shutdown collided with the reduction in force at the CDFI Fund and why that bureaucratic blip might turn into an economic earthquake for credit unions, small businesses, government contractors, and yes, even those who are trying to buy a house. This is the week that the lights went out. It's a story of spreadsheets, shutdowns, and a small federal office that quietly powers billions in community investment. Every few times, it feels like a year, Washington forgets how calendars, how things work, even how their job is supposed to operate. And the government shuts down. It's usually temporary. It's a political timeout. Workers are furloughed, inboxes hit auto reply, and we all wait for Congress to reboot. But this time, Treasury's CDFI Fund didn't just pause, it vanished. That's right. Instead of furloughs, employees got RIF notices, reduction in force. That's government speak for you're fired. You don't work here anymore. A shutdown is like pressing pause. A RIF is more like tossing the remote into the Potomac. One resumes, the other, it's gone. So what does a CDFI Fund even do? Well, let's get into it. It's a small office with a big mission, funneling capital into communities that Wall Street usually ignores. It certifies and funds lenders that specialize in affordable housing, small business loans, and financial inclusion. These are credit unions and community loan funds that make the system fairer for the people most likely to be left out and those who really need it. When the CDFI Fund staff vanish, so do the people reviewing grants, processing certifications, and answering those, hey, is my award still active type emails. The gears stop and its finance silence cost money. And picture this, you're a community lender. Your grant applications is pending. Your loan application is pending. Your certification renewals are waiting for review. You've got a compliance question sitting unanswered for weeks. Now imagine every staffer who could help you just got their badge deactivated. The help desk isn't busy. It's gone. That's not a bottleneck. That's a blackout. And the first tremors hit credit unions, who make up about a third of all certified CDFIs. They rely on the fund's awards and guidance to expand lending programs and stay compliant. Without those people in place, disbursements stall, compliance timelines slip, and liquidity plans start to look like wish lists. And for borrowers, especially in rural and underserved areas, that means fewer loans, higher rates, and delayed projects. The cruel twist, the CDFI Fund was created to make communities more resilient during times of instability, not less. Now, it's the one in crisis. And hence, here's how the collapse unfolds over time. Now, this is just a forecast, but this is how I see the dominoes falling. Month one, disbursements freeze, and everyone assumes it's temporary. That's kind of where we're at right now. By month three, right? Think about this, 35 days. This is business days, mind you. Lenders are going to start delaying their own comments and commitments because they can't predict when or if the next award hits their account. Keeping on going further on, key staff at these institutions are going to move on. Projects are going to dry up, and the CDFI network, one of the government's most quietly effective engines for economic output, starts running on fumes. Every dollar that passes through the CDFI Fund attracts private investment. Sometimes it's a 5-to-1. When the stream dries up, entire projects stall. Affordable housing phases get delayed. Small business owners can't get bridge loans or even secure regular loans. Contractors who rely on federal or community-backed capital watch opportunities fade. And for everyday Americans, it means fewer options for fair loans, delayed housing, and another reminder that government dysfunction isn't just a DC story, it can also be a Main Street one. And can Congress fix this? Well, absolutely. Could lawsuits or political pressure reverse the layoffs? Possibly. But rebuilding takes months, not weeks. Clearances, rehiring, onboarding, it's like trying to restart an orchestra after firing the musicians. So if you're a lender, contractor, or business owner wondering what's next, the answer is simple. Do not wait for the politicians in DC to get their act together. Stay connected to your local CDFI, credit union, banking institution. Plan for lean months. And remind policymakers that community capital is infrastructure too. Because when the lights go out in Washington, the darkness doesn't stay there. If you like this video, if it helped clear out some questions that you had, please remember to like and subscribe. It really helps us and really helps the channel. If you have any questions, make sure to answer them in the comments below, and we're going to make sure to answer them as we move forward.